Women are said to hold up half the sky, yet 700 million of them still do not hold a financial account. Listen to this. Despite a decade of gains, the Global Findex 2025 finds that women in low and middle income economies are still 5 percentage points less likely than men to own any account, and the gap in actual usage is still wider. Women are less likely than men to save formally, borrow formally, or make digital payments even when they have an account in their name. Women's World Banking is one of the world's largest non-profits, supporting a global network of microfinance institutions and banks serving women. Its own asset management portfolio tells a sharper story. A 19.8% gap persists in the average loan size extended to women-owned SMEs versus their male counterparts. In fact, Women's World Banking is the only accredited partner representing women in the G20 Global Partnership for Financial Inclusion. This underscores just how absent women's voices remain at the tables where financial systems are designed. Ellen Iskenderian has spent her career determined to change that. As president and CEO of Women's World Banking, she has steered the organization to reach millions of women with financial products they never had before. In this conversation, I ask her, how far have women really come in 5 decades of financial empowerment? And what does true inclusion look like beyond just having a bank account? Is gender lens investing finally going mainstream, and what will make it stick? And with 750 million women living in climate vulnerable regions without access to finance, how do we make women's financial resilience the centerpiece of our climate response? Listen on. This is the second of our 2 special episodes around Women's Day. It's Monday, the 9th of March. I'm Anirban Chowdhury. This is the Morning Brief. Hi, Mary. Very warm welcome to the Morning Brief.
Thanks so much.
So let me start by asking you for a sort of a perspective over the last 5 decades. It's been close to 50 years since Women's World Banking was set up. Tell me what financial empowerment for a woman means now, and how far has she come in that journey in the last 5 decades?
Well, that's a wonderful question, and you're absolutely right. Women's World Banking is creeping up on its 50th anniversary. It's really, I think, quite a wonderful origin story. The organization was sort of built out of an iconic UN conference on human rights for women in 1975 in Mexico City. And the 4 women who would eventually become the founders of our organization, including Ela Bhatt, who was just so instrumental in thinking about our orienting mission, which is that all women should have the full range of financial tools that they need in order to be secure and I think this "and" is so important, and to prosper. And what I find kind of remarkable about the timing of all of that is only 1 year before that conference, women in the United States gotten the right to have a loan or a credit card in their own names without their husband's signature. So this was still very, very new, this idea of women's financial independence. And yet here these women were coming together to found this global organization. So we have been tremendously true to that mission ever since our actual foundation in 1979. I think there's been, enormous progress in some of the early goals of account ownership, gaining access to savings and bank account. But I think, unfortunately, we've gotten maybe a little stuck on that as a metric. So today, in the low and middle income countries, 73% of women do have a financial account. That's sometimes a full-fledged bank account, sometimes a digital account, which is extraordinary progress. But do they have the full access to all of those products and tools that our founders identified as being critical to financial independence? And that we're still making slow gains. We still see that women and their businesses do not get access to credit at nearly the rates men do. When they do, they tend to get much smaller loans. The rates of insurance, very interesting, much lower penetration for women. Although when they get access, and this is globally, this is at every income level, we find women tend to buy more insurance than men in that role of sort of household protector, household financial gateway. They're very true to that role when it comes to financial products and insurance in particular.
Mhm. In fact, you have spoken about intrinsic qualities in women that make them fitter to be more financially empowered than men, and qualities like loyalty, for instance, like prudent repayment, and the fact that they are risk averse. Despite that, we still see this gap, right? I mean, for example, according to a World Bank study, 7 in 10 women owned macro, small, or medium enterprises report inadequate access to growth capital. Also, women entrepreneurs face an estimated, I think, $300 billion annual funding gap globally. Tell me about how the banking sector is still lagging and the three ways in which they can turn this gap into a huge opportunity.
So, well, it's already a huge opportunity, and you hinted at some of those numbers. Women do tend to be more loyal, more consistent clients of financial service providers. We see um, on average that a woman is more likely to be a client of a financial service provider's 5 years after initially signing on. We know that a woman is much more likely to buy a cross-sold product once she had or gotten the trust. Once she trusts that organization, and I can't emphasize trust enough. And I do want to take one issue with a word you used. We don't really see women necessarily as being risk averse. We like to think of them as being risk aware, that they are going to take, as I say, they're going to ask more questions, they're going to need more information, they're going to take longer to get to a risk related decision like taking on credit. But when they do so, when they've gotten themselves to that point, we see women tend to save for longer before they go on to taking on a credit product. Again, their borrowing behavior is very, very similar to men's, with one big example. We have seen systemically that women are better repayers. It's not just a microfinance thing. We see that at the small and medium sized enterprise level as well.
So, if things are changing, do you think, for instance, gender lens investing, do you think it's moving from niche to mainstream? And we see some institutional capital also coming in into that segment. What do you think will make it more sustainable?
So I'm very much an optimist, and I do think gender lens investing is becoming more mainstream. But I think it's becoming mainstream because we are no longer thinking of it as something on the side, a sidecar to a mainstream investment a philosophy or a thematic approach. You just can't underestimate that total addressable market that is still out there, that still represents huge opportunity. We've talked about $700 billion being the annual opportunity that the financial services sector is missing by not recognizing the full financial potential of women clients. My own view is that the sooner we recognize the opportunity of women as clients and as good repaying clients as an untapped market, the sooner we'll move that idea of gender lens right firmly into the thematics of many mainstream investors.
Got it. Do you think tech in banking, which has got so many, especially countries like India, Kenya, etc., tech has got so many of the earlier deprived citizens into the fold of banking. Do you think tech still is exclusionary when it comes to women?
That's a great question. I don't think it's exclusionary, and I couldn't agree more that it really has been digital wallets, digital assets that are representing just a huge leap forward for all underserved populations. But we've got to make sure that the technology is in women's hands, and in terms of smartphone ownership, that still does lag. There is still a gender gap in smartphone ownership. And I must say that the largest gap remains in South Asia. Women are more likely to share a phone, or if there's a one smartphone in a household, it's going to be with the husband. So we've got to make sure that the access to the technology is there. We also have to make sure that in addition to the financial literacy, which women have traditionally lacked in, or at least lacked in their confidence in making financial decisions, that really also extends to digital. But one sort of cautionary tale that I would add to this that is really quite concerning is we're seeing that women on digital platforms are much more susceptible to harassment than men are. And so the consumer protection elements that are being introduced, and I know that the RBI is very, very concerned about these issues, are even more important for women, because that harassment level can become a form of exclusion. If women aren't treated well with technology, they're going to stay away.
Okay, right. So smartphone penetration, custom protection, RBI, you've segued so beautifully into India, which seems to be a country and a market which has interested you so much. In fact, the whole region. So, for example, I mean, Mohammed Yunus received his Nobel Prize 1 year after you took over as the president and CEO of Women's World Banking. One of your first trips to India fascinated you when you saw a woman in Ahmedabad who was recycling bottle caps and had made a business out of it. Then, of course, there's this example of Pakistan, where a huge digital wallet company, roped you guys in, and women's participation was just 12%. And you saw HUL agents there, who brilliantly got so many more women in. Tell me what about the region still fascinates you, and why you think it has tremendous potential, especially when it comes to financial empowerment and bringing more women into banking.
Well, you've certainly done your homework, and I'm greatly appreciative of that. No, I guess I've had a long fascination with the region, and I feel like that fascination has always been repaid in a sense, because the efforts that have been made, the recognition of the need for a broader access to financial services has been understood in South Asia more broadly, as you say, and in India. And I also have a great appreciation for the willingness to experiment, to test, and learn from what the tests were. There were some, very, very concerning elements to the early microfinance days, over indebtedness. There was sort of a lack of guardrails. Frankly, the regulator didn't want to take on full-fledged regulation of the sector. But then when it did, you saw tremendous growth. And again, that building of trust in those financial institutions. The digital public infrastructure that India has put in place has really, frankly, unlocked so much of what Women's World Banking has been able to do in India. First, recognizing the essential importance of the digital identification with the Aadhaar, then creating the Jan Dhan account. We were very fortunate to be invited in by some of the largest public sector banks to make sure that the product really was being used, and that they were noticing that there were some dormant accounts, there was a lack of usage. How could we drive usage of this model? I think one point of disagreement that we might have is that the government always refers to the DPI as being gender agnostic, gender neutral. We don't really think anything is gender neutral, but you've laid down such wonderful rails for us to then make sure that that infrastructure that it is in place can benefit women. From this Jan Dhan account, which we've now done with 3 public sector banks and 30 regional rural banks, reaching up to 60 million women in India through this account that both takes the basics of the Jan Dhan savings account and then adds the ability to qualify for an emergency line of credit. And then some of the banks that we've worked with have cross-sold insurance and pension products as well. We've seen incredible use cases, if you will, in moments of climate emergency where having those savings intact, being able to call on emergency funds was the difference between a family really coming out intact after a flood or some other natural disaster.
What do you think are the gaps that still remain? For example, the Sakhis, they have really helped in bringing women so much more into banking, investments, savings. But would you talk to me a little bit about the gaps that still remain that India should and can work on?
Well, I'm so glad that you mentioned the Sakhis because we've been just amazed at how effective the BC Sakhis have been. And I always want to emphasize it's not just in bringing women into the sector, but men. We've heard really eloquent testimonies from men that they feel more comfortable asking questions of women agents. They feel that maybe they don't want another man to know that they don't understand exactly how the technology works. And so they'll ask a woman more easily. But despite this, we still have some way to go. Only 15% of the BCs nationally in India are women. I think one of our proudest policy wins, if you will, in India for women's world banking was getting the RBI to bump the target of 10% women employment in the financial sector to 30%. And that target was largely driven by the really tremendous performance we've seen by the BC Sakhis, by women agents in coming from the neighborhoods, the villages, the places where their neighbors were perhaps underserved. But we've got a ways to go to get to that 30% target.
Right. So just to zoom out again and bringing you to a global question, one of your really interesting and really critical insights have been the impact of financially empowering women and its relation to climate change, right? You have said gender equality is the most urgent climate action of all. And climate risks are increasingly impacting women. In fact, you in a previous interview, you said that 753 million women in climate vulnerable countries, and I will include India in that, do not have access to finance. And perchance there is a natural sort of catastrophe, 880 million cannot receive government relief. But overall, when we talk about globally and of course the global south, etc., what can be done to change this?
I'm so glad you raised that because I think quite candidly, we were a little slow in recognizing that there is almost one-to-one correlation between a country being climate vulnerable and its lack of financial inclusion for women in particular and for its population more broadly. And so there's, as you mentioned, there are 750 million women who are in climate vulnerable regions. The access to digital payments becomes absolutely critical in the moment of a climate emergency. You know, they're not going to be handing cash out in the middle of a flood. You've got to be able to take that digital payment if you're going to be helped. So I think there really are a few things that financial institutions can take on that's really recognizing the things that is their bread and butter business are at the heart of resilience. If you've got the access to payments, as I said, if you've got a savings account that you can be formally saving and protecting yourself, you have access to insurance for your business, for your home, for any of the health outcomes, a natural disaster. And they need access to these emergency funds. We have to, make sure that this bundling of products, insurance and savings and credit. But again, I don't ever want to let go of the opportunity that this presents. Financial institutions need to be making financial tools available to women to adapt their businesses, to borrow for adaptation technologies, to pivot their businesses into, into adaptive techniques, to take on green jobs, to take on green skills. We've seen, great success in, or actually greater success in rolling out solar products if women are also trained in the aftercare of those products. So thinking of the financial opportunity that also comes with the adapting to extreme weather.
Right. Let me just take that question and put it in a different kind of problem that the world is facing right now, which is so many wars that are happening. And the latest one is, of course, West Asia, where women's empowerment overall is a massive, massive problem. Does the vulnerability also increase several multiples in situations like war?
Of course, and in fact, thank you very much for unfortunately bringing us back to the reality that we're all working in, and so concerned about our partners and friends in the regions that are directly affected. In the work that we've done, in the immediate aftermath of the Russian invasion of Ukraine in 2022, we were given, just almost a gift of a group of enumerators who had been central to the creation of the Global Findex, which is the sort of gold standard database for financial inclusion, who were working in Russia and Ukraine, offered their services to any organization that wanted to look at, well, what had happened to financial inclusion and women in particular in a situation where, if you recall, men were conscripted into military service, millions of women left the country, and it was a country that was actually pretty highly included. There was very high cell phone penetration, account penetration, levels of education, and yet we saw women would get to the border. The Ukrainian currency was not a convertible currency, and it was very, very disturbing. We tracked a group of 850 Ukrainian women over the next few years, and we learned a couple of really important things that I think should be taken to heart by every regulator that's working in a conflict area. The biggest step forward for those women who had left behind assets in Ukraine that they were not then able to bring to Western Europe was that the European Central Bank greatly relaxed their know your customer requirements. They allowed the women to open bank accounts so that as they took on jobs, as many of them did, they were immediately able to deposit funds into a bank account. That was such a game changer for the women who had emigrated to Europe, and one that I hope we can see used more broadly in these conflict areas. We also have recently done some very important work together with the Georgetown University Institute on Women, Peace, and Security about the important economic role that women need to be playing in post-conflict situations. In far too many conflicts, women are not part of that rebuilding, that reconstruction, that economic recovery effort. And yet we see when women are included, greater gains, faster gains are enabled. So right now we are in the midst of the crisis, but you have to start planning for the post-conflict immediately.
Right. I mean, I it's great that it happened in Ukraine. For example, I don't see it happening in a place like Gaza, for instance, but maybe Iran, etc. Of course, I mean, the model can be well replicated. Two final questions, and I know we are running out of time. 100 million women banked by 2027. Where are we now, and what does the next year look like?
Thank you so much for setting me up on that question, because this has been really one of the most exciting things at Women's World Banking this last year. So as you say, we had set this target to reach 100 million women with a financial product or service that they didn't previously have access to within 10 years. As of the end of last year, so 2 years ahead of time, we had reached 118 million women. So we blew through our target. But In some respects, I'm almost more excited to tell you that we reached 76 million men with those same products and services. And the reason I'm so excited is that's saying when you design with women's needs in mind, greater convenience of a product, including digital and financial literacy in the design, making it very reliable, building on those issues of trust. It works for everyone. It's for men and for women. So we are absolutely over the moon with the fact that we've achieved our targets so far ahead of time, and that they may even be pointing a way to an even more inclusive role that the financial system can play.
It's fascinating how including women in a kind of a policy or initiative automatically benefits men as well, but the opposite is not always true. But
Not always the case. This is true.
yeah. But I'll end with one final question. What would your advice be for women who are in leadership roles in the financial sector across the world?
That's an unusual question, and very thoughtful. I would really encourage, if you are a woman, a leader, or anywhere in the infrastructure of a financial institution, you have an enormously important role to play. As you know, Women's World Banking is, in addition to providing this advisory work with financial service institutions, we are also an investor. And we have seen a direct correlation in our portfolio companies that if you want to attract more women clients, you hire more women staff. And so if you are inside an organization, you need to be an advocate for other women, both as peers and as leaders and as colleagues, but also as clients, because you play a unique role within an organization. And we see that women on the inside can influence things like the product design we were talking about, like the way women are recruited, like the way women's businesses might be responded to, whereas a man might not see a business opportunity, a woman might. So I'd say if you are inside a financial institution, you play a unique leadership role, and please step into that role.
Fantastic. Mary Ellen, thank you so much for joining us. This was such a wonderful conversation.
So it was wonderful speaking with you as well. Thank you so much.
Mary Ellen Iskenderian leaves us with a provocation as much as a promise. When you design financial systems with women's needs at the center, everyone wins, men included. So, what do we have? 118 million women banked ahead of schedule and a $700 billion opportunity still on the table. The world has spent decades asking if it can afford to include women. The harder question, the one we can no longer defer, is what it costs us every year that it doesn't. That's it for today. This episode was produced by me, sound designed by Amrit Reggie. A new episode on The Morning Brief drops every Tuesday, Thursday and Friday, wherever you get your podcasts. Keep listening.